Thank you, Angel, and Heidi ho, everyone. Welcome aboard, and of course, happy Hump Day to you. I hope you're having a good one thus far. I'm nearly sorted with this new computer and all the things that go with it. Man, technical things, they drive me nuts. I jumped the gun there, Angel, I think. I'm sorry about that. Thank you very much. I lost the control panel and I assumed we were live. So there you go. Again, I will welcome those who are in the room and wish you a happy Hump Day in case you didn't hear me before. And as I was saying, I think I've nearly got this new computer mastered. I'm not quite there, but I've nearly got it mastered. We'll get there eventually. In the chat box, why can't I see the chat box? Again, something else that drives me nuts. There I can. G'day, Paul P. How you doing? Pound US dollar. Let's have a look at that, shall we? Share screen might be a good idea also. Righto. I'll update some trades in a minute, but for now, let's have a look at pound US dollar on the 1 hour chart and see if it's worthy of our attention for the breakout. Looking at about 120 pips, 2.5 times that is 240 plus, what did I say? 120 plus 60, 300. Will we go with 300? Sounds about right to me. Where's that? 300 from there. Takes us almost up to the monthly pivot. That makes sense to me. On the downside, wow, 133 area. How long since we've been there? Yeah, don't like that one so much. We haven't had a lower high for mine either yet. I think I'll stay out of that one and just continue with managing the one that we're currently in. Thus far, we've got our 200, which, why have we got our stop loss there? That's right. We didn't take the 200, did we? We decided that there was more left in this. I'll catch up, guys. We decided there was more left in this and moved our stop loss to there. I think it's probably a good time to move our stop loss to there. That'll nearly get us our 200 anyway. Reason. Well, I can see a little bit of a potential base forming here. I can see the need for a pullback to this, about this level here. Yeah, I don't know. The problem is I don't know that this area is safe because we haven't had a weekly pivot test, right? So what I want to do, what I'm trying to achieve is to lock in as much as we possibly can here without sacrificing what we've already got in the bank. Obviously, we're not going to do that, but I don't want the obvious potential retracements to take our 50 pips or whatever there was there. So I'm going to move my stop loss. I'm going to move it to the open of that bar there, plus a couple. So 136.61. 136.61 is where I'm going to move that to. Trailing that stop. And I think that's as good as we're going to get. As I said, if it gets through here, I think we're going back to the weekly pivot. So let's be satisfied with that. If it does come and take us, I'm okay with that. It's really, we've got substantial profits now on the trades that we're in, and not taking them doesn't make any sense to me anymore. We've got a trail. I've got a trail because they are substantial amounts of money. That you're dealing with, you know, we're a long way into profit. So it's now time to think about protecting that, in my humble opinion. So let's go and do that on a few of these. And then we'll come back to today's action. We have got Euro Yen. Euro Yen. Now, Euro Yen on the daily chart yesterday was a buying bar. Now, that's not concerning me too much. The untested, again, same as the pound, the untested nature of the weekly pivot is a concern, and our stop loss is below that. Now, you've got two options here. You can either move your stop loss above the weekly pivot and trust that this won't reverse beyond that point, or you can probably recognize that we're going to have a rally to that point, and that would be in the word I'm looking for escapes me, concert with what I've just said. So this level here, which is the left shoulder, right? If we're going to have a head and shoulders here, we may well be coming off this level and going and putting in a right shoulder. If that's the case, it could go to there, it could go even higher. But the weekly pivot's not going to protect us there either. So these are the things I'm considering. Have we got our stop in the right place at the moment? Look, I think we could take a little bit more. We could bank a little bit more, maybe move it down to there. Is there any different to there? Probably not. Probably not. Because if this is going to continue to go, I think it's going to continue to go from where we are. If it's not, then I suspect that we're coming back to at least the weekly pivot, maybe even beyond. So I will lock in a bit more here. How much is it? Another 30 pips. Why not? So the level for the new stop loss is going to be 129.75 on this one. 129.75. That's Euro Yen. Aussie dollar. Wow, the Aussie just looks so weak at the moment, doesn't it? RBA is doing nothing to halt that. Why would they? They don't really want a strong Aussie dollar. But again, we've got an untested weekly pivot. Eventually, we're going to have that suck back. There's just no question about that. That will happen. It's just a matter of when, not if, in my humble opinion. In terms of where's the best place for our stop loss, it's the same thing as what I just mentioned. We've got nothing here in terms of recent resistance. This is the only level of resistance, apart from the weekly pivot, of course. So we either trail the bars, as in daily bars, and I think that's probably wise because it does lock that bit more profit in. And the real chance here is that we're going to get a test of the weekly pivot, and our stop loss is not going to prevent us from or prevent that from happening. I like the fact that we bounced off the monthly, so I don't consider we're going back to the monthly. So again, you've got a choice. Put your stop loss well above the weekly pivot. So move it, debank some money if you like. I'm not going to do that, but I am going to put my stop loss above today's bar. If it continues on, happy days. We'll try again tomorrow to reassess that and see if it needs to move again. So there's another 65 pips there. And like I said, we've got substantial money in the bank now on all of these positions. And I think it's time to protect that as much as we possibly can. This is not going to last forever. So 73, let's say 73.50 will be the new stop loss on that one. It's always that balance between being greedy and knowing what is possible. Anything's possible, but this is the one I'm not going to move, right? And the reason for that is that this just needs a little bit of an opportunity for this consolidation area to break and stop here. So I think we're in the right place here. Weekly pivot's not going to do anything because it's already been broken and rebroken. So I think we're as close as we need to be to the market right now. And if we do get that spike up to here, we can withstand that and that can go on. So I'm not going to move Euro Swissy. I think that's all I need to do. Euro CAD on the monthlies, nothing. Pound Kiwi on the monthly is still in drawdown. So we just wait on that one. But, you know, we've now banked a little bit more money today, and I'm happy with that. As far as today was concerned, there were a heap of them, a heap of key reversals, 2, 4, 6, 8, but they're all the same trade. And they were all against the Swissy and the yen. So the Aussie, the Euro, the pound, and the Kiwi were all reversing against the yen and the Swissy. That tells me something. That tells me that there's a potential retrace or rethink, if you like, or banking some money, if you like, on the market sentiment. Because you're talking about risk on currencies versus risk off currencies. What's really interesting here, and I said as much this morning in my preview, was that I'd be looking for this area here because it's a beautiful place to trade from. Why? Because you've got a nice confluence here of that channel, which of course is representative of an inverted head and shoulders as well. And then going the other way, you've got a double cross, very clear double cross of both the daily pivot and the bottom of that range. So it's a tough one. Which do you choose? I'm on an hourly chart, of course, but the bigger time frame, which is the daily chart, is telling me that we've got a clear double bottom here as well. We've also got what's almost a hammer, I suppose, at a support level. So that's telling me long. The other chart's telling me potential short. I'm not sure how I'm going to get into this, to be honest. But I do want to trade from here, really keen because of the confluence area. I think I need to see something on the smaller time frames. And I'm kind of there, aren't I? It is there. Trouble is the stop loss would have been, maybe you could put your stop loss there. But how far are you willing to go before you take profit? That's the problem. Reward to risk here is terrible because, you know, here's your support level and you bang straight into it. Don't like it. Look, leave that one with me. I think it's a distinct possibility that we'll get a trade from here, but I may have to sneak down to the 30-minute chart as well, but I'm not seeing it at the moment. Of the reversals, I want to have a chat to Ash about that, really, because it is, in my opinion, a market sentiment statement that both the Swissy and the yen versus, as I said, the Aussie, the pound, the euro, and the Kiwi, those four currencies, all put in key reversal bars yesterday. Why, Ash? Why is it so? Is it because they just needed to retrace, or have we had a little bit of a shift in sentiment overnight?
I think that the former is probably the case. We're still seeing some weakness in oil, and I think maybe there's a little bit more cooling off in some of the rally that has been going on. But it is difficult. I think, you know, but the question of retracement or effectively reversal is kind of the $1 million question, isn't it? And it's going to depend, you know, as we kind of open back up again. You know, we had Freedom Day in the UK, and as we open back up again, we have this kind of situation where the Delta variant was starting to spike, and you know, we're seeing it globally.
Yeah, sure are.
You know, then we kind of like get this fear really kind of starting to kick in, where everything starts to come down, not that significantly, but everything does start to come down. The FTSE starts to come down. The CAD obviously collapsed. The yen strengthens. Bitcoin comes down. Gold doesn't know what it's doing. So that was 2 days ago. Really, you know, that kind of all kicked in. It seems like we're now at the phase of kind of what next, and central banks seem to be sort of like, you know, relatively keen to continue the rally going, and not just leaving it do its thing and you know, but like breathing yet on its own. You got ECB kind of changing policy and saying that that they're quite happy to raise inflation targets, so more stimulus is coming. So the central banks seem relatively accommodative still. And I think, you know, Jerome Powell spooked the market when he first came out and said it might be wise to talk about tapering. But they're still way off kind of doing it. But you know, looking at the FTSE, it's not really in recovery mode. It's a difficult one here, actually. But I think what we need to say to ourselves is the current bounce has to be treated like a retracement. But there are no current signals that suggest that we should be now getting in short on that retracement. So that's sort of the way I'm playing it. It hasn't yet convinced me that it's going to hold here and now we start to move in the opposite direction. So I'm still kind of the mindset that we've got our lower low, if you like, and now I'm looking for that lower high. But the lower high hasn't really kind of said, right, here we are. Now we're ready, and we'd have to sort of like check some news and data to kind of make an assumption call on when that may well be. You know, when are we likely to get that lower high? And it could be today, but is this the hour that it happens? And I think the only way we can really sort of know that is by establishing who's coming up. You know, who's about to speak, and what's likely to be the tone of their sentiment. What data have we got? And what's likely to be the tone of that data? And I think then we'll get a much better feel of what we should be doing. FTSE 100 is relatively strong so far this morning. You know, so hearing you say the risk to reward ratio just isn't there. That's exactly the same scenario we've got with the FTSE. I'll quickly show you the FTSE here, because this reversal or retracement question is really poignant, because it would be oh, hold on a minute. Oh no, that's okay. It would be the question you'd have to ask yourself to know what's going to be your approach. Are you just going to buy in and hold here, or are you actually sort of, you know, looking for a little bit lower before you get in? Bitcoin's at a bounce today, and that's another one really that we could use as an example of, is this the place that actually people should be looking to get in to Bitcoin at 30,000, or are you looking for this to be a small bounce and then things continue to collapse and then you get in later on? Now, of course, if you haven't got any exposure, it'd be probably quite wise to get something on at these levels.
Did the lower low happen before the rally? Probably not.
The lower low happened before which rally?
Yeah, I don't know what chart Shukri was on the other day. It was probably the weekly, and there was a clear potential double bottom.
Oh yeah.
And I just wanted to know if that had been taken out, that low.
Well, this is. I'll show you Bitcoin in a moment, because it's worth talking about because of the price point. So this is what we got with the FTSE. Now the FTSE has had a decent couple of days after the big collapse on Monday. It's had a decent couple of days holding on. It's been tricky, as I said to Lewis yesterday, and everybody in the room yesterday. Be careful, because it looks a bit rangy, and it proved to be the case yesterday. As let me bring this on with pivot so we can see a bit easier. This was yesterday's price action. We took this first move. That was the first move we took, but then afterwards it just kind of got into this range. It didn't really go anywhere after that. Then we've come down and made that higher low here. The issue with this is, because I was going to call a long this morning, and I was going to get into a long this morning, but the problem is that this was the resistance point that we picked out yesterday, that it didn't get hit yesterday. But this was the resistance point we picked out yesterday after doing the analysis on the horizontal levels over here and the spikes over here. That looked like first contact. Actually, it turned out to be more shallow than that in the end yesterday. But that's where we are. So when I opened up the charts this morning, what I get is just this little band in here. Price is caged in here, and I think, well, and we're up at the upper point, and I think, well, that's a sell zone, but it doesn't look like it's going to sell off. It does look like it's going higher, but your words of risk to reward just kind of rung in my ears, and I thought, well, it's a difficult one to take, because you haven't got long you haven't got much to aim for here before trying to take profit, and there's a lot down here that you could actually retrace before hitting that target. So what I prefer to do is really assume that this is, as I say, some kind of retracement, back up again. So we're kind of looking to look back after this moved at lower. This is a retracement to this point. It could go a little higher, and this is really the issue with it, that it could go a little bit higher. And I haven't looked at those other currency pairs that you discussed, but maybe they could go a little bit higher as well. But really, we should still be on our guard to say that this could well be a bit of a turning point in the market, and we do actually have a decent flush down, maybe 5%. You know, we haven't had 10% for a long time, but maybe a decent flush to the downside before we can really start going long. But I would like to get long today. You know, today the market looks pretty good, but I can't justify it here. It's too close to resistance. What I want to do is see if the market can just pop down into this area again, which is where the daily pivot is. So that is, I mean, it's going to be at least a 0.75% drop down in the FTSE 100 before we pop back up again. But it's here. That's what I want today, mate. But doesn't look to me like a nice environment to trade. It looks pretty bullish and looks pretty strong, but not a nice environment. Now, if we bring on Forex Factory and see if we can make some assumption calls here. Let's see what we got. Now, I was analyzing the dollar yesterday, so let me just bring these back up again.
What if you got a break and retest of the resistance level that you chose yesterday on the FTSE?
Sorry, mate. Say that again.
If you got a break and retest of the horizontal level, the resistance area that you chose yesterday, and still on your chart now, and which is now being tested, right?
Yeah.
How does that change things, or does it change things?
Yeah, it does change things. So, so again, I don't know if David is in the room, but we did say we talk a little bit about levels,
structures,
and this is one of the things that I would look at. Good day, John. How you doing, buddy? One of the things I would look at is this being a level, and then I'd be trying to make a decent judgment on where the next level is. Now, just on this chart, it looks like it's there. So there's room now. So from that point to that point is around about 60 pips, which is 1% on the FTSE. So a 1% gain, near enough. Circa 1% gain on the FTSE, which would be a decent run, and that could happen, and it could still be in a downtrend, and it could still go lower. So I'll be quite happy to let that break and this become more of a low, and then see if I can pick it up there. So the price isn't the problem. The fact that it's the highest current price is my problem. I don't want it to be the highest price that I've got. I want to see a higher price first, and then it being at least a lower price than's printed, because at least then I've got somewhere that I can aim for to say that traders are at least possibly going to see that and at least push it up to there, and then we'll just have to have a look at it if it gets to that point, and then push it higher. In actual fact, it'll probably be along that level. It'll probably retrace along this particular line here. It'll probably go up, down, and then maybe get something, but it might even come a little bit deeper before going up. But to say the price point isn't the issue, it's the fact that it's the highest price I've got. So you know, it's a sell zone currently.
Although you'd be currently breaking the resistance trend line too, wouldn't you, from 15 July?
This one up here. This one here, right?
Yep.
Yeah. Good point, mate. And actually, that would probably encourage me to wait for a bit lower. You know, so if I looked at that would encourage me to see that break and then come back probably into this area and then up, rather than this higher point here. And I'd probably do a couple of fibs or something else on there just to kind of have a look at what's the most likely price point. But it'd be kind of good if it kind of hit this area, because at least then you've got some confluence of trend.
What's your medium term outlook
for the FTSE?
Yeah.
When you say medium, you mean a month to 2 months?
Yeah, week to month.
Week to month would be bullish.
Okay.
Yeah, I haven't really got bearish sentiment on the FTSE at this stage. You know, I've you know, the FTSE itself is quite undervalued. When you look at the Nasdaq and the S&P, it's a bit of a different picture. But by the same token, we're in earnings season, so we need to see some of those numbers to make a decent judgment on whether those numbers are I guess, shocking enough to drive the market lower. But I still think we're far enough out from Jerome Powell's supposed rate hike and everybody else's supposed rate hike to continue to see these global equities relatively buoyant. Delta is a problem, and the Delta variant would be the caveat. But I'd ignore that for right now because it's something that I can't make a judgment on. So I have to take it out of the equation. I have to just imagine that's almost a constant that just bubbles along in the background. And it doesn't spike one way or the other, really. But right now, it doesn't seem to be spooking the market sufficiently enough to drive it, continue to drive it lower. There are a few other things that are out there.
Except on the Aussie. The Aussie looks to be in horrible trouble. Yeah,
the Aussie doesn't seem to be in horrible trouble. But I guess that's more down to lockdown itself than Delta, if you see what I'm saying. So it's more the reaction. Yeah. And I guess I don't see a reaction from the UK that it's going to change at this stage. It could do. And I'll be on top of it.
You're now in a real inflection point as far as that's concerned, aren't you?
Yes.
You're now into day 3 of freedom at the end of the day, and we're now to see how that
exactly. But where this is going to really start to ramp up is because we're now in festival season. So because it's the summer, 3 days in hasn't really driven huge crowds together in the way that it will do by the end of August. We'll know by the end of August where we're at. I don't think we'll know really before that. Obviously, the sort of like the winter aspect is going to be an issue, but if it's pretty robust as it's airborne, then it's going to be robust as it goes off to all these festivals. So I think the festival season is going to be the telling aspect of it, and we'll see what happens. So that doesn't change my view. That leaves me where I am with the FTSE. So I'm gonna look at your Forex Factory and just see whether there's anything that's on its way. What have we got? Retail sales actually from Australia were very negative. So it doesn't look like a very positive consumer. Crude oil inventory.
Yeah, you're going into the middle of winter. There's a few things going on there. It's not exactly retail high time.
Right. Fair play.
So month to month, I kind of get that.
Okay. Crude oil inventory is going to be interesting later for the oil market. That's already been beaten up pretty sufficiently from its highs. I think currently down from the highs, near enough, like 18%, maybe 16% down from the highs. It's a pretty protracted move, mate. So here we go. Now, I think this is where it gets interesting, and this is tomorrow, ECB press conference. And the reason that I think that Christine Lagarde might actually have a bit of a play with this, so we're just talking about reversal or retracement. This is where she could step in and maybe whether we are about to get some sort of retracement into reversal. Is the lower high coming? And it puts me on tomorrow. That puts me on an alert for tomorrow to say the lower high could be in tomorrow. That's where I'd like to look for it after Christine Lagarde has spoken, because she's likely to say something quite dovish. And if that's the case, then the market's not going to collapse. But what if she doesn't? So that's what I'm going to be on the hunt for. I'm going to be on the hunt to listen to what she's got to say tomorrow. Because that could be a possible time for it to turn. Then there's a load of data on Friday. So it looks to me like Thursday and Friday are the interesting days for the market this week. Until then, I think we're either pushing higher or we're going to stay in this range down here. I don't think we're collapsing. I don't have the information that would suggest to me that that a collapse is on the cards today. That's my thought.
Yeah, look, I think, and I said it, I think on Monday, that the early bird catches the worm as far as the currency market was concerned this week. And that seems to be the case. If you weren't in or didn't get in to all these moves that have been taking place, certainly the dollar strength that we're seeing, the Aussie weakness that we're seeing, if you weren't in already by, Monday, midday or something, you pretty much missed the boat. And now we are waiting on retracements to get in. I mean, fortunately, I'm in most of those, so it's not a big deal. In fact, It's been really good. It's been a really, really good week for consolidating those positions. But as far as new positions concerned, I think you're right. The euro tomorrow will be the turnaround point for that. If it is going to turn around, if it's not, it's then in deeper trouble, I suppose. But everything else is where I came from in the first place. The Swissy yen, to me, they are the keys right now to actually getting into the market. And if you're prepared to believe that the market is risk on, I don't see that right now. So I see the retracements that we've had as probably temporary. As a retracement is, of course.
I'm of the same view, mate. I mean, but as I say, today it looks pretty positive, and I'd like to be a buyer today, for the day at least, and see if there's any buying opportunities. But I just can't justify it just yet, and I don't see any data out here which would suggest that it's going anywhere but up. There doesn't seem to be too much worry in the market right now. Let's have a quick look at Bitcoin.
Mm-hmm. Then we'll bring A in, and we'll do some market structures towards the end of the show. But I haven't seen David in the room, so
okay. Well,
I hope he is.
So this is the price points. I mean, we can sort of like start thinking about market structures and levels here, and there's at this stage, when I've got this lower trend line and I've got this particular horizontal level, then the price of Bitcoin could fall anything between 20 and 12,000, and still be attractive enough to buy. If it breaks down there, then all bets are off and it's done. But this 30,000 mark seems to be relatively solid. I mean, we've seen this held now. In the initial bull run, it was a bounce point. And now we've come down to it. We're starting to kind of create some. We're creating some accumulation down here and continued accumulation. So as we did come down yesterday, we hit that bottom point again. Yeah, actually came down to 29, pretty much 29,000, and now we're getting another bounce. Now this, again, is it a retracement or is it a reversal? At this stage, I think you have to treat it as a retracement. There's no guarantees and there's no signals that this is a reversal, and there won't be until it at least takes out something of vague significance. So it's going to need to get above 33, I would have thought, to 35. Before if this looks like it might turn around, and that might be the time to start buying around about 35. At least you've got a little bit of insurance there that it's broken through some of these lower lows and lower highs. Sorry, some of these lower highs. It might start to give us a bit of a higher low. So watching Bitcoin again, a bit trapped, bit rangy. I'll be sort of like keeping my eye on this one, but. The risk on assets right now all look the same to me. They all look a little bit tight. Shorter term, I think we should be still looking for buying opportunities. And when I say short term, I mean like days or hours even. But I think in the long term, we've got to be aware that that the market may well roll over one more time before we actually put in the bottom.
Yeah, look, there's a pretty clear descending triangle there. So, that's my market structure that I'm seeing. And I think there's going to be a trade that's worthwhile from there somewhere if you trade Bitcoin. Whether it's long or short is yet to be determined, but that's the structure that I'm looking at. So there's a bit to go in that yet before it breaks either way. Yeah. And I think the first one of them, just in my mind's eye, and please don't think about trading this, but if it were to break to the low side, that's what I said before, and put in a new low and get back into that range, then I think even I might spend some money on it because I think it's a great buy from there.
Yes. Yeah, I'm the same, mate. I wouldn't want to add to any cryptos in this area at all. And I don't think it's necessary. I think, okay, you might miss out on 20% here, but still having that little bit of insurance, if it can get above 35, probably 37 realistically, starts to hold above this area, then I think Bitcoin is a definite buy. But until then, I think we're waiting on that. But it's gonna have some trials and tribulations on the way up by the looks of things.
Yeah, got to see that structure break. You've got to get out of there.
Yeah. Okay, mate. Well, let's talk a bit of gold and a bit of oil, because both of them are actually really interesting markets right now. This is gold. Sorry, this is oil. Let's start with oil today. This is oil here. 77. So I'm going to call it $77 because it was $76.90 on the futures, and we're currently down to 67. So what would that give us? Sevens. That's going to give us 10%, and that's going to give us another high. So it's about 15%, mate. It's a 15% drop in oil ever since we hit that circa $77 mark. And
cool, eh?
What's that?
Pretty cool, eh?
It's very cool, mate. It's very cool. And you know, it's one of those weird things, isn't it? That the price point was obviously interesting and of interest, you know, for you to pick it out. But actually, we have had a fundamental shift in oil because of this this kind of spat, you know, in amongst the OPEC kind of nations, you know, because the UAE. I think they've managed to kind of convince everybody else that they're going to be increasing supply, and it's going to be interesting to see now oil inventories. You know, oil's another one. Oil will probably go nowhere for a few hours, and then we'll see these oil inventories, and we'll see whether this is actually some kind of driver. They would probably want further reducing of inventories. You know, they don't want those inventories popping up. Inventories start to pop up today as well, along with what's been going on with the UAE. Then this is probably due another drop before it kind of like hits a new price point level. But yeah, oil in a bit of trouble. I do see some of those oil related stocks quite a bit lower on the FTSE 100. They're probably not quite at the area that I'd want to buy them up. But you know, I'm certainly a buyer, and there's no problem with oil. As a decent commodity, it's just whether it could come a little bit lower. But we've had that news now from OPEC, and this is the price point we've held at. So this looks like fair value right now. So for us to drop again, we do need something else. And as I say, it could be the crude oil inventories if they're significant enough. It could be something more than that. Who knows? But again, we're ignoring Delta. We're ignoring all that stuff. And just kind of going on what we know.
I get the feeling that Ainsley's going to be in front of the news. What time's that? The inventories?
The inventories will be out at 3:30 UK time, so an hour after the US Open.
Another late night for Ainsley.
Yeah, to be honest, I don't think they're going to be that. It's going to be that significant. But you just never know. You know, it's the next thing is the point, really. It's the thing on the horizon that could drive the price a little bit. I would have thought we're more likely to buy into that number than the other way around. You know, when you look at the expectation is for another drop in inventories. So you know, the previous was a bigger drop, but I would have thought because of where we are with oil currently. Where's the possible resistance? Maybe there. Maybe that would be a possible target point. But
gee, it's in the buy zone there. Wow.
This is a buy zone, yeah, for sure.
Totally.
For sure. It just depends on whether you've got the setup. Let's have a look.
Is Ainsley with us? She was in the room earlier.
I did see her in the room. Yeah, she's there.
Maybe we've ignored her for too long. G'day, Andy. How you doing, mate?
There she is. Look.
Hello, Smiley.
Oh, just.
Oh, yeah. Yes, it's not great news around Sydney town, is there?
Oh, it's been a long couple of weeks. And week 2 of homeschooling, and yeah, but what you said, Ash, with oil.
Sorry, say that again. The oil.
Whatever you said.
Yeah, what you said.
Oh yeah, yeah. Will that be something you'd wait up for the inventories, or would it be because it's not like a massive deal, is it? It's just the next thing.
At the moment, the big thing obviously had been the OPEC countries just not agreeing, and then they were just saying they're going to lift the restrictions on supply quotas, and it's just like, you've got to be joking. And we just saw it just fall away, and it's just like, hello, boys and girls, boys. Did you not? Does this not sound familiar till about, from about April last year?
In what way? Can you expand on that? Can you expand on that? Because I'm looking at oil and I'm thinking this is eventually going to be a buying opportunity, and this is a point of where
it is. However, at the moment, what they're saying is that they're increasing supply against a falling demand. Because the Delta variant has actually done a really nifty job.
Okay.
And as this happened last year, Asia was the first one to shut down again. And okay, we've had vaccinations and things like that, but we're finding that the Delta variant is not as quite as, caring about the whole vaccination process as the original COVID strain. With that, there's Singapore's back in lockdown. Half of Australia is back in lockdown. Is New Zealand even out? Oh, it doesn't even matter. But, we're talking about a lot of this demand is just not opening up. Now, we're talking about Freedom Day. We're all watching Freedom Day. Well, I noticed that the US has said that the UK is a no-go zone. So, look, will it ravage? Will it keep going? Will things keep churning? I like it. You said, okay, it's come down, it's hit this level of support, and we're going quite nicely sideways here. Inventories flipped around last week, and that was just the same caboodle last week. I just can't see if they're going to increase supply, and they're all chomping at the bit to increase supply anyway. Is it going to make much of an impact? I heard last night somebody was saying they keep up with this nonsense, increasing supply. We're going to see oil back down at $50 in the short term.
Right.
So is that the next leg down? I can't see on your chart.
$50. Let's have a look. So let's bring this on clean, just so we can have a look on the wider time frames. $50 brings us down to, oh really, goodness me. Yeah, well that's a long way down.
Long way down.
I see this point here. Yeah.
So it's quite a held level there, that $50.
I mean, would we believe that though? I mean, it's got to get through a bit here to kind of get down to.
It is, but they were just saying if they keep pumping and the demand, for whatever reason, diminishes a lot faster, as they were seeing as in Asia, as it started in Asia.
Mm-hmm.
And I remember we were talking about COVID when it first hit last year, and we were talking about it hadn't been recognized as being it was the US and Europe considered it an Asian issue, a Chinese virus, as we heard Trump mention once or 2 million times. It became that whole delayed impact again, with everything sort of concertinaing shut. Asia was first, then it was Europe, then it was the US. It took ages for that slack to take up, right? So what they're saying is if they continue to increase supply, we're going to see, with the demand slowly going down, we could see it down around that 50 level. Now, 2 weeks ago, they were talking about it as it was marching all the way straight up to $77. We're going to see it back at $100 by the end. If you look at the technicals, and if you run your trend line from the lows up underneath that, it's a very sharp trend line, but from the down, from there, you're still going to go. You're still there. It's broken the trend line now.
Yeah.
That particular one, but what do you reckon? It had to do it.
I mean, now we've got a retracement zone at least. I mean, it's It would appear that if oil does now pop up to around about the $70 mark, maybe 69, 70, that looks like a sell zone, doesn't it? I mean, that's the way I would read it.
Yeah, and then it brings back down to that chunky area, back down to where you've got next as leg one.
Yeah.
So you've got leg one, a retracement, and leg two.
Well, let's have a look what they're saying. So we got meeting notice, the ongoing strengthening of market fundamentals, and this is what they're focusing on, isn't it? They're not worrying about the delta, and it is difficult to focus on delta, but the overall fundamentals are good. So with oil demand showing clear signs of improvement and the OECD stocks falling as the economy recovery continued in most parts of the world with the help of accelerating vaccination programs. So they're very much focused on that.
Yeah. That's all fine until the Delta variant doesn't work very well. It's working, but you know, how many cases have you got in the UK?
Oh, I mean, it's a stupid amount. Like, cases are spiking, but they're not worried about the cases. What they're worried about is the pressure on the NHS, and that's research I haven't done, to be fair. So I don't know whether there is the pressure. I don't think there is. On the NHS.
Where we're talking about, you've got 50,000 people a day with COVID.
Yeah.
What they are now saying is this gives, how did we get to Delta in the first place, alpha, gamma, beta, delta? Because it mutates the more it travels. So you've got now a Delta variant, which is a fairly virulent strain of COVID. What they're saying now, because it's whipping through everything, the chances of that mutating and causing another strain is what the bigger problem is. Okay, you've got all these people, and yes, we've got the vaccination over here happening, and then we're up to, and there's two already that is acting like the Delta strain coming out of Brazil, Peru, one of the two.
Yeah.
That's what they're saying is the ongoing issue is the mutation of these nasty strains, and that is what's going to hit because there is no they'll find that there'll be no vaccination, or the vaccination is not as strong, or whatever, and then we're back to square one. I know it's all a lot of hypothesis, and we can only.
That's the problem. That's my issue with it, though. Is that because it is hypothesis, and there's no doubt that we can look for longer term kind of ideas of what we might want to do in the future. But where we currently sit, there doesn't seem to be this connected circle globally. You know, you got the UK opening up, you got Australia locking down, you got the United States doing their thing, you got Europe doing something else. So because of this sort of like slight confusion that's going on, it seems like we need to be more informed before we do anything but continue to buy. I mean, that's the way I see it right now. It's just like things are bullish, things are okay. The FTSE now is up to 6,900 off. So it's almost done. It's almost like popped up now, 0.5% since we've been talking. You know, it's really quite positive. You know, and things are quite positive. So the delta aspect of this story, it seems like it needs more. It needs more of a turn. You know, more kind of more to happen with this before we're sort of like thinking, okay, maybe we should get a bit more concerned here. But you know, oil will be in a lack of supply while they're in the lack of demand, even though they're increasing supply. It doesn't seem like we're at that point yet. So it doesn't seem like we need to be that concerned at this stage.
Yeah, but Europe and the US weren't concerned either until about I don't know, June, July.
But no, but that's the point, isn't it? But the market's concerned like that. So like I'm talking like right here, right now. Yes, they might well get it wrong, and in a week's time we might be having a completely different conversation. But where we're at right now, it seems to me like it's okay to buy things. It's okay to go and buy oil because there's not really an issue. That issue hasn't flared up sufficiently.
And I guess I'm looking at it from this point of view.
To suggest that we should be coming lower.
Yeah, and from that point of view, I guess you could see the Australian dollar was going to fall off its perch last week, and that was from just listening to the news with living in Sydney. You know, when and it was on the news release on the Sunday. We were meant to have a 2-week lockdown. Kids were only meant to be homeschooled for the first week and then go back. That hasn't happened. We're into the second week. It was when they said they're going to open up again. This will be all fixed, all good by the 30th of July. And then there was one line that that our state premier made, which was not sure whether the 30th of July is realistic to open up. And it was just, there it is. And you could tell. And then Victoria went into lockdown. South Australia is going into lockdown. And all these issues, you see it just sort of go, and it all just snowballs. But yeah, you're right. The Delta variant, will it impact? I could see it impacting Australia last weekend as far as it ain't going to happen. And when we had construction sites closed for the first time ever,
right?
Those kind of things are going to impact.
Yeah.
And impact tightly and really hard.
Yeah.
So, and I know the vaccination isn't an issue. I know we're still trying to get things up and pumping. I just think, and it might be because I'm feeling a little bit doom and gloom, everything's doom and gloom. Because, you know, we're into our second week of homeschooling from, absolutely, Gary. And that's on top of 3 weeks of lockdown with school holidays. So I might be climbing the walls a little bit, but you just
I mean, the other thing to obviously consider is that we have different leadership. You know, the leadership we have in this country. Well, the leadership we have in this country is you know, they're quite happy to play hard and fast. You know, it's a completely different approach. It's just like, wow, it's all right and everything's fine as long as there's not too much pressure and we're not bulging at as long as the bricks don't start breaking on the hospitals, we're absolutely okay. So that they will go ahead and continue to ignore some of the data that's out there, because realistically, this is yes about people's safety. But not as far as the government's concerned. It's about the economy, and it's about whether the economy will continue to tick over. And this Freedom Day it doesn't look like it's being reversed. So, you know,
what do you mean reversed?
What's that? Sorry.
What do you mean reversed?
Well, I mean
that particular mindset.
No. Actually starting to ease, but actually starting to curb some of the freedoms that have now been reintroduced. Them taking them back away again.
Oh, okay.
You know, it doesn't, because and it should, mate. It should. You know that Ainsley hit it on really right on the money earlier on. The cases are spiking. You know, we're not going in the right direction. You know, surely the equation you would have thought would be it's under control. Few cases bubbling around. You know, we got a herd immunity, whatever else. Now it's time to open up fully again. But it's not that. It's kind of like there's a spike in cases, and we're going right. Everything's back on. You don't even have to wear masks if you don't want to.
Well, my head tells me that was always going to be the case, unless you've got 100% vaccination or immunity. Which is, what are you?
Well, you'll never get that.
70%, something.
Yeah, I don't think you'll ever get that. You won't get 100% immunity. I think we will be living with this, but it's more the fact that you'd want it like suppressed to the tens of thousands rather than, you know, the hundreds, in the hundreds rather than in the tens of thousands, which is really what we've got. You know, I think there's like 50,000 or something yesterday. It's they are high numbers, stupidly high numbers.
Totally, and you'd be absolutely, you know, foolish to think that once this freedom thing happened, that the numbers weren't going to spike. I mean,
no, but as I say, if we focus on the numbers, we're focusing on the wrong thing, and that's the reason that I still think we can buy the market and not be too concerned with things like oil, you know, things like the FTSE and everything else at this stage. As I say, might be a completely different conversation next week because it's happening fast. But at this stage, I
agree with you. It would be a different conversation, but I think the conversation for now is, for mine, just hold tight, do nothing. Until there's a clear indication as to whether this freedom thing's a good idea or otherwise.
Yeah. Could you explain?
G'day, Lewis, by the way. What's that? Sorry,
I was just going to ask. Could you explain to me? Freedom Day was marked in London with anti-vaxxers and anti-lockdown protests. I just don't understand why you would bother when lockdown had been lifted and vaccination is voluntary.
Well, why do
they do that? Protest about vaccination. Well, don't have one. Die. That's all right. That's your choice.
Do you know, way that there's so many sort of behaviours that are unexplained. I don't understand the mask thing. I really don't understand why people have got such a problem with putting something on your face that you can take straight off as soon as you leave somewhere.
Look, I don't really get it. Smell.
But people have a problem with it. You know, like it's some sort of freedom, like some, you know, it's impacting on their freedom. And really, you know, if you looked at it, you'd be really sort of like saying, if you went round to their house and say, right, let's talk about freedom. Tell us what you think that you've got that's, you know, that says freedom. And if they list them down, you probably go, well, that's worse than not wearing a mask. That's worse than not wearing a mask. That's worse. So why are you kicking off about this small thing and not kicking off about all these other things? But people don't really know. You know, they see something in front of their face. To pun a phrase, it's quite a phrase, and they you know, they get kind of angry about it. But I don't know, if I'm honest, I don't know enough of those people to understand their thinking, and it'd be unfair really for me to comment on what, because maybe they've got good reason, maybe they've got really good reason. I don't know what it is.
It just stuns me. I mean,
it's fear, mate.
Anti-vaccination, anti-lockdown protest on Freedom Day, and it's just like, well, don't have a vaccine, nobody's making you, and lockdown's lifted. Did they not get the memo, or you know? Well,
you know, and this is anyway. The thing. I mean, one of the reasons that we've got cryptocurrencies is the lack of freedom. You know, because of the central banks controlling people's money and banks controlling people's money. There's not that many protests about that going on, which is much more impactful than having to wear a mask in a shop.
John's got the question. Freedom Day.
Freedom Day is basically the economy opening back up again to where it was prior to these lockdowns, because we've been drifting in, like, you know, pubs could only open until 10 o'clock and things like that. So Freedom Day, you know, to my understanding, is the lifting of all restrictions. So festivals are back on, and everything else is back on again. So
they can go down to the pub without a mask, and they can stand at the bar and drink, and
I think so.
Drink their warm beer and all that kind of jazz.
You know, I was in a shop yesterday. There were people not wearing masks yesterday, and it actually looked a bit odd. You know, I'm sort of used to it.
Yeah, you know? we can't actually go outside in Sydney, just in comparison, we can't actually go outside. We're meant to carry a mask with us and ID. So if we're 5 kilometres away from our address, then there is a fine if you're walking along and you're meant to exercise with a mask on. Seriously? I mean, you go for a 5K run with your mask on, breathing in all that carbon dioxide, you come back delirious, wouldn't you?
Yeah. I mean, that exercise would be quite tricky. I mean, I quite like the mask thing because it makes me look a bit like Batman. So I haven't got a problem with it.
Okay.
But, just quickly, let's talk about gold, because gold's really struggled. It's tried really bravely the other night to be the safe haven.
Oh, yeah.
And then it just went, you know, we just can't do it against the US dollar strengthening so much. So as we saw with that drop-off, that huge drop-off at the beginning, the S&P started to fall. It took gold with it. And S&P, when the S&P is meant to be an inverse correlation, so if the S&P goes up, gold should go down. If gold and conversely, so S&P went down, gold went down. Real bond yields on the 10-year went down, gold should go up. If gold went down, inflation, gold's meant to be an inflation hedge. Gold still went down. It's just everything that I'm looking at for a fundamental structure and basis on gold is just, it's not there. And then we've got it, you know, last night it just couldn't hold. It tried valiantly, I must say, for it to try and hold against the US dollar climbing like you wouldn't believe. But now it's just gone, now I just don't know what I want to do.
So
I don't know.
every
any
time I look at the gold chart, I see two potential reasons for what's going on, and there might be more, but I can only think of two. And the first thing I can think of is that that maybe gold isn't doesn't have the same the same
safe haven
as it used to have. That's the first thing. Or there's manipulation going on. I suspect it's probably number two, but that's the only.
Yeah.
What other reason are we getting that gold is not rallying off the back of the stuff that you've talked about? Because traditionally we thought it should. So does it not have the same use, or is it that that there's manipulation, or is it something else?
I'm not sure, because it was not last week, the week before, when we're it was 2 weeks ago. So on that nice trajectory up, as we're heading up over where we end up at 18. Yeah, on that leg up, that Monday and the Sunday and the Monday, we'd heard really good news about central banks looking for had shown new interest in purchasing gold again, and off the head and off it went, and it certainly took off, and then all of a sudden everything started to collapse and fall inwards, and I was just thinking, well, okay, we've got this whole structure now that everything, all the relationships have collapsed, all the correlated information that, you know, when you see this go this way, you can expect it to go that way. That's just not happening, and now we're just going a blur at the moment.
Do you know, I every day I open the gold chart, I don't know what's happening. It's, you know, you see this bar here, and you think, okay, it's coming down. It holds that point, complete indecision. A bar like that, you think, okay, it pops up. It does pop up, but then it kind of creates an evening star. You get this bar here, and you think, okay, nice, that's gone into that point. Nice hold point there, right up, and then back down again. So the charts are impossible, and I don't know either how you keep any kind of sanity if you're trying to trade this stuff.
If you drop down to 4 hour and keep talking and then have a look at the consolidation, it just is, look at that.
Yeah, it holds, doesn't it? You know, even when it comes down aggressively, it pops up again. You know, it came down yesterday. That 4 hour bar that we saw yesterday looked like it was the rain's coming off. What is going to drive this? What, I mean, we can't stay stuck here forever. There's going to be something explosive that happens.
What if we went to the weekly chart about 3 or 4 weeks ago, when we actually did trade that gold on the weekly chart?
Yes,
would still be in that trade if we didn't move our stop loss, right?
Okay.
To me, that's still clear. We've still got a beautiful tweezer bottom sitting there below it, a big higher high, and at this point, that's still a big lower low.
I agree,
higher low.
Yeah. Okay, I'll go with that. I think that's fair. So what we're saying is that actually, if you come
out of the noise, is what I'm saying.
What's that?
Yeah,
I'm saying get out of the noise.
Get out of the noise, yeah. Longer term time frames, and actually what you've got is a hold here, and you should just be holding on to this, because you've still got that inverted head and shoulders as well. I mean, there's still quite a lot to like about this on the longer term time frame. And you're right, you know, when
that's the way I see it.
Yeah, this is what we should be doing. So actually, for many people, that would suggest this, no wonder this price point is holding. And it's interesting you point out that weekly chart, mate, because that's the weekly bar, and it's come back to the top of that weekly breakout, and it's retested, and that's the area where we're starting to see all this confluence on shorter term time frames. So it looks like the price point on gold probably is around about the 1795. That's a buy zone, and on a weekly, and you'll be trading it on a weekly. With a stop down here, probably at 1740, and then just hold and see. So you're going to need $50.
Yeah, they're huge stops. Yeah, I mean, you do with gold.
Yeah, I'm not suggesting you trade the weekly chart now, but to me, look at the levels on the weekly chart.
Why not? Why not?
Well, because we already did. We blew it. We didn't blow it. We just moved.
Oh no, because as you say, you'd still be in this. You know, this would. Still
yeah, but we're not.
No, we're not. But I'm just sort of saying that if that particular,
we're back to entry is what you're saying. Yeah. I know.
Yeah, just you know, but we're going around this point here. As long as it doesn't break here, it's the same trade. It's effectively it's the same thing. You're doing the same thing. You still got your stops in the same place, and you're just going to hold and see if it takes off. But you know, $50 to the downside, you'd need those wide stops. So you'd have to make sure that you were sensible with how much you stake on it. But you know, we're willing to risk $50, $500 on this. You know, it's one of those, isn't it? That's the question you'd be asking yourself. That's probably not your approach, and I appreciate that. But that is one way to do it.
And my way is normally my way of trading it. I don't, and whilst I do look at the weekly, I'm trading down on a daily with entries on a 4-hourly, and it's just, as you saw from the 4-hourly, you're just getting whipped around, and it's soaring. It's a little bit challenging. I don't have.
What do you do in that scenario? Do you just leave it? What's that?
A couple of times I've got chopped.
No, but do you stop trading it, or do you continue to try and do the same thing until it eventually turns in your favor?
Look, you know, a couple of times you'll go in again, and then go, it's time to give it a break. And that's the way I've normally done it. But at the moment, it's really struggling to get traction.
Yeah.
Really struggling to, you know, I'll add in a position, and that position will drop and take out the profit margin on the first position. So it's a really tough gig to trade at the moment. It's not moving as neatly as it has done previously. And normally I'll leave it right alone if it's going sideways and consolidating, because it'll just do that it'll do it for a week and a half, 2 weeks at a time. Well, you know, earlier this year, it just went sideways for 2 months. So it's not a lot you can do. You just
What
have to do what it does.
What about if you chose, and I don't know if you do, but it makes sense to me. We know the Aussie is in deep trouble. What if you traded against the Aussie? I mean, it's probably too late now, but it's got a pretty good chart against the Aussie.
And again, that's I haven't done it against the Aussie or against the pound or anything like that. I've pretty much stuck to the US dollar. Yep. But you know,
you have a look at the daily there, Ash, as well. When you,
but
it's behaving beautifully.
Interesting.
Look at that. It's sharp, I've got to say, that one. But
that's straight up, isn't it?
Interesting, isn't it? Because I mean, the difficulty, I suppose, with it is that if you're going to trade the Aussie if you're going to trade gold versus the Aussie because it's not working against the dollar, why wouldn't you just trade the Aussie dollar? You know, if you're looking for strength weakness, then if it's struggling against the dollar, surely a better one would be just trade the out and out Aussie
dollar. Yeah,
and just trade that short.
Well, we are.
We are. Yeah.
Happily, we are.
Yeah, I mean, you can see that.
I suppose my point is that gold isn't as strong as the dollar, so why wouldn't you put the dollar in front of anything rather than the gold? You know, why would you choose gold? Because it's
I don't know. I don't. But
and
I'm just suggesting things for Aid that he does.
Okay. And it's also a liquidity thing. You know, most people trade gold against the US dollar. There's not a lot of people who would trade gold against the Aussie dollar. So, you know, it's I guess and to have a look at prices and spreads and things like that is something I'd need to have a look at.
Yeah, it looks okay actually. I mean, you know, the other one is silver. I mean, we were looking at silver yesterday, and it looked like it was on a pretty decent hold line, and it still looks like it may well hold, but it looks like it's poked through right now. It would need to get back up here by Friday to validate this level here. But silver looks different in many respects. It's not holding positions. It's actually breaking down continuously. Does that ever play on your mind when you're sort of like looking at gold? You ever look at silver and think, I kind of want silver up as well if I'm going to be trading gold and being really bullish on it?
The other way, silver follows gold.
Silver follows gold, but
Silver's
okay.
meant to follow gold, but even so, the charts, those charts are just not even close to being correlated, are they?
No, well, it doesn't appear so. No, gold's actually holding a level, and silver's just weakening day by day, it seems. Interesting stuff.
Actually, are they sea of golds outside your window?
Yes.
At first I heard them, I thought, oh, what are the girls playing on?
Yeah, no. Yeah, the seagulls are noisy. They're very, very noisy, particularly at this time of year. But yeah, and there's a lot of them. Not an easy room to sleep if you ever sort of like find.
Yeah, that'll slow them right down, Jeff.
This is the office / guest room, and you know, people never sleep when they come here, so we don't tend to get many guests.
That and a lumpy bed. That's how you get guests.
Yeah, it's not the best. So. Well, let's go around the grounds and just start to close up. I think we get a pretty decent picture. I think interesting stuff about oil, particularly. I think gold just sounds like a bit of a no-go zone at this stage.
No, not until you get a bit more direction.
A bit more direction.
Yeah. You got too many dojis there happening.
Yeah, but let's go around the grounds, mate. Have you got anything to update us on before we wrap it up?
Not from an immediacy point of view, but I can certainly give you some ideas that I haven't given so far or thus far today. Let's have a quick look. See, my two pairs that were the range trades of the week, Aussie CAD and Swissy Yen, are pretty much playing out. So what we've got with Aussie CAD is an untradeable, beautiful scenario, if you like. We saw this bar last week and suggested that all you needed here to get into this was a lower high. You probably got it for some. That's not a bar I can trade at all, but it's there. Maybe you need to take a photo of that and show exactly what goes forward off a false break off a range, and that's exactly what has happened. Have we come to the bottom yet? Is probably questionable. Is the bottom here or is the bottom here? Either way, if you get a false break of that or a bounce off it in a higher low, then you're entitled to trade that long again, maybe back to weekly pivot certainly, but maybe back to the top of the range again around about the 93.60 mark. So keep your eye on Aussie CAD. I think it will continue to range, despite the fact that the Aussie is in deep SH1T at the moment. The CAD's also in a precarious position. A lot to do with oil, but what's the bottom of this range? If it does break and retest it, then the Aussie's going to underperform the CAD, I'll put it that way. Kiwi Swissy we spoke about earlier. Look at that double bottom sitting there. I was in absolutely two minds here earlier as to which way this would go. Still there. But a higher low here does get me really interested in trading it to the high side. The double cross on the daily pivot upsets me somewhat. And what that suggests to me is that we may retest that level there before this goes long. So it's tough to get in the market right now, but a higher low on maybe the 30-minute chart would be interesting. It's certainly not there at the moment. It's a mess. The other range trade of the week was Swissy Yen. Now, Swissy Yen, once again, has immediately gone down to the bottom here. Well, it was at the bottom, sorry. We're still looking for that to go up to there's actually a trend line sitting there as well. Sorry, I've completely rejigged my charts. The top of the range coincides with that probably. There's a confluence area there somewhere. It's about there. If you hit that and find a false break, happy days. On the smaller time frames, you'll see that as now a break and retest of that area, which is interesting. So weekly pivot comes back into play there. In my humble, but the higher low here is where you get in, right? You've got to take some profit here, but the top of that bigger range on the daily chart is at the monthly pivot. So great target areas you've got here, weekly pivot and monthly pivot. If you can find a way in, that trend line is the key probably at the moment. So if you get above that, retest it, get yourself a higher low. I think that's the trade to take on Swissy yen. The other was dollar Swissy, which was again really interesting. We're looking for a short on dollar Swissy, if I recall. And the reason for that, what was the reason for that? Weekly chart. It's not the same on this broker. That's interesting. Okay, I might have to reserve my analysis on that till I have a good look, but it's pretty clear what I need to see here if I am to get short, and that is a false break of this trade line or trend line as it is. So smaller time frames, that's a weekly chart, of course. Smaller time frames, you can pick that up anywhere. There's all sorts of resistance trade lines available to you. So I'll be looking for that. We're kind of at the shoulder area here, and I think it's a great place to look for an entry. That's the 4-hour chart. Again, anything that looks like a false break here. So above, back underneath, retest it, get into the market short. Maybe even on the smaller time frames that's available. I've got an untested daily pivot here. So actually I might have to concentrate a bit harder on this because that looks really good to me. Give me a trade line. So I'd like this high to stay. A line through there, but anything off these lines I think will work. So back underneath after you get, maybe you get a false break to the high side, back underneath it, retest it. Take your profit here at the low of the day and leave something in for a potential reversal on this, maybe even down to this area somewhere. So around about the 90-cent mark would be cool. That is dollar Swissy. Now, as you all know, I'm a dollar hater. I've been looking at the dollar index chart. It's around, it's just above the 93-cent mark at the moment, and it's at kind of soft resistance, recent resistance. So I do think this is entirely possible that it does fall away from here. How far it can go, I don't know. Whether it can reverse all that distance, don't know. But for immediacy's sake, I think looking for false breaks is my plan for the day on that one. That's kind of it, mate. I normally do a euro analysis as well for the 30-minute chart. Why I haven't got that chart here, I don't know. I'll bring it up here. Yeah, look, I don't see anything at the moment on the euro, to be honest. What I do see is a potential double bottom. We're a long way from being able to trade that, however. I do like that bar, rejection bar, took out, gained a little bit of liquidity down here perhaps. So maybe, I don't know where the area is, maybe that trend line that comes through here. I think if you hit that and put in a higher low off there, then you've probably got a trade to take on euro dollar on the smaller time frames. Whether it can climb its way out of the depths, I really don't know, but it's not a long-term trade. You're only looking at a short-term trade. So you target, if you can get in, say down here on maybe, I don't know, let's say a 10, 12 pip risk, you can certainly scale out big time at the daily pivot. I would think if you're really bold, you might look at that as a target area, but yeah, not that keen until you get a higher low. So it's pretty clear what I need to see, Ash, but I'm not seeing it right now. Building phase.
Yeah, that's fair enough, mate. Fair enough. Yeah, same sort of thing, really. FTSE 100. You know, as I say, I think getting long is really the name of the day, but kind of difficult to get along at this stage. It's the area that you were talking about as potential resistance will need to become support for us to get in the long, because it's confident this morning, up a whole 1%.
Yeah,
without any problems at all.
Okay, well that's about us then, I'd say.
Yeah. Thank you so much, I thought it was
thanks,
fascinating stuff today. Thanks for the guys in the room.
Smiley face on.
Oh,
Get your smiley face back. There you
right,
go.
no, sorry guys, I've had a shocking headache, but I think I just
Well,
need to
thanks
go
for
get
battling
some
through
fresh
that.
air. So sorry.
Yeah.
Sorry, I'm not my bouncy self.
No, you're
Tassie
okay.
Pino will fix it.
Yeah,
I
it
couldn't.
will. It will no doubt clear. But yeah, thank you. Great information as always. We will be back tomorrow, same trade time, same trade channel. Thank you for everybody in the room. We will hopefully try and get some structures if we got time as well tomorrow, mate. It's difficult actually.
Yeah, I
when we
don't think
got-
Dave was in the room anyway. So
No, I think we're okay. Thank you, Andy. Thank you, Angel, as always. Thank you, Lewis. Thank you, John, Paul P, and everybody else that's here. We will see you tomorrow. Thank you to you, buddy. See you in the morning.
Bye bye.
again, what he said. Thank you for being our trading buddies. Bye bye.